So we discussed and introduced audit evidence, where we said that this is the information gathered by the auditor to facilitate formation of an opinion. Yes, information gathered by the auditor to facilitate formation of an opinion. And we say that the evidence we gather has to be sufficient and appropriate. Sufficient and appropriate. Sufficient and appropriate. Where we say that sufficiency, this is a measure. This is a measure of quantity. This is a measure of quantity. How much evidence is enough to facilitate forming of an opinion? Then discussing sufficiency, we said that this will be influenced by the nature of the client. Are we auditing this client for the first time? If we are auditing them for the first time, we need a lot of evidence, unlike a recurring audit client. We talked of the nature of the ICSs, that when we have very strong internal control systems, we may only require a little evidence. We also talked of the materiality aspect. Yes, materiality aspect, you are verifying items which are very material, you require a lot of evidence, unlike when you are trading in an area where items are not so significant, amongst other points that we discussed under sufficiency. And then we went further to discuss appropriateness of audit evidence, which is the measure of quality. It is the measure of quality. And the measure of quality, we said we have two elements, we have two aspects, where we talked about reliability, and relevance. Measure of quality is about reliability and relevance. Now, looking at Roman number one, reliability. Reliability, we say that evidence will be considered to be reliable, if evidence from different sources, is consistent. If evidence from different sources is consistent, you're saying evidence will be considered to be reliable if evidence from different sources is consistent. But I'm asking you how much you owe KCE, you're saying it's zero balance. Checking the records, it's zero balance. That evidence is reliable because it is consistent. Yes. Ndio tunaona hata kwa askari saa zingine wakiuliza watu kulienda aje, kulifanyika aje, where did all this start? You give some information, others some contradicting information, and they are saying this evidence is not reliable. This evidence is not reliable because it contradicts itself. Ni kama sasa ile mtu ameongea uongo. Ukiongea uongo, unajua mtu anakuwa na kibarua ya kukumbuka ulidanganya namna gani exactly. Yes, and like the truth will don't strain because it remains the truth. But when you are telling lies, you are likely to be inconsistent. You are likely to be inconsistent. And we highlighted that as a quality or a trait of fraudulent people. Fraudulent employees, those who perpetrate fraud in organizations, in most cases, they contradict themselves so very much. Yes, when we ask them how they spend their weekend, they give different versions. It's because they have lots of money at their disposal. Yes, using right, left, and center without proper accounting. They care less about how they're spending this. They are likely to give lots of inconsistent information. As kama wale majamaa wanakuwa kwa social media, niliambiwa kwamba walienda wakaamua hawatafanya mtihani ya campus. Yes, kasema hatufanye mtihani ya campus. Wewe tutaenda tuambie lecturer tulikuwa harusi. Yes, kwa harusi tukirudi gari ikaharibika. So we didn't make it to exam. They wanted to be given some time to prepare themselves properly. Yes, lecturer akawambia ni sawa sawa, exam basi itakuwa next week. The same place, the same time. Yes, shikutana nako ka story mahali. Yes, umekutana nako ka story mahali. Yes, wasee wakaambiwa basi mtihani ndio hii, kila mtu aende room yake. There were 3 guys. Kila mtu akae room yake mfanye mtihani. Question number 1. Harusi ilikuwa wapi? Yes, 25 marks. Gari ilikuwa aina gani? 25 marks. Iliharibikia wapi? Yes, that was the exam. Yes, even hata saizi vile tunaongea bado wako exam room. Yes, bado hawajamaliza. And the few answers they've given, they are highly inconsistent. Yes, zinaenda kombo because they're giving inconsistent information. That evidence cannot be relied upon. It is inconsistent, cannot be relied upon. Now, measures of, let me not talk of measures. Let me talk of generalization. Generalization on reliability. Reliability of audit evidence. Generalization on reliability of audit evidence. What are the generalizations on reliability of audit evidence? Number one, documented evidence. Documented evidence is more reliable than oral. That remains. Documented evidence is more reliable than oral. Nani akona hizo past papers? Nikuonyeshe vile wanaulizaga hii swali. This the auditing. Yes. So documented evidence is more reliable than oral evidence. That's one generalization. Loma number two, evidence from original documents is more reliable than photocopies, comma, facsimile, ndio kitambo tulikuwa tunaita fax, all digitized documents. Evidence from original documents is more reliable. Documents from original documents is more reliable than photocopies, facsimile, or digitized documents, Ushakutana na fax machine? Kuna mtu ako na experience ya fax machine? Yes, fax machine inatumika kama telephone hizi za ofisi. There's somewhere we were using them. Lakini ni kitambo kidogo. I think technology inaenda iki-advance. It works like a photocopier. Only that the copy is delivered far away to the recipient. So unaikaga document kwa machine. For instance, unafinya namba ya mwenye unataka kutumia 0701 22 48 44. Ukifinya enter, inajifotocopy, lakini inatokelezea kwa the recipient. Hiyo ndio fax machine. Siku hizi sidhani kama zinatumika. Yes, tulikuwa tunazitumia mahali kwa college, ilikuwa inaitwa step up college. Yes, ilikuwa 05 and 6 ni kitambo, I guess hazitumiki siku hizi. Yes, so faxed documents, photocopies, digitized hizi tunapiga picha siku hizi. They cannot be considered to be reliable more than the original. Hata ukiwa utasikubali kutumia hizi unless there's no other way out and you have way of verifying them. Original documents remains more reliable than any other. Roman number 3, we can say external or externally generated evidence is more reliable than internal evidence. Yes, externally generated evidence is more reliable than internal. Is more reliable than internal. What do we mean by that? Tunamaanisha kwamba, if I asked you when you paid your last installment, yes, you gave me some information. Then I'm asking our accounts person there, when you paid last, I'll consider your evidence more reliable than this other evidence, because they are likely to manipulate. But yours, and especially if you maintain proper books of accounts, yes, which are complete, then externally generated evidence will be considered to be more reliable. Excellent. I'm still looking for that question. You see how it is tested. It's usually given 10 marks. Roman number 4, we say evidence gathered by the auditor himself or himself, yes, e.g. observation, is more reliable than evidence from any other source. Ile mwenyewe umejitafutia, haujalilai na third party, haujaenda kuuliza expert, ni wewe binafsi umegather hiyo evidence, it will be considered to be more reliable. It will be considered to be more reliable because it's you who gathered it. Yes, we always hear, let's hear from the horse's mouth. Yes, you are the horse, you had first-hand information. Ni ile unawaambia kwamba ni mimi mwenyewe nilijionea. I observed execution of a certain procedure. I can confirm that evidence in that area or your ICS in that area are very strong. Sababu ni wewe binafsi ulienda ukagather hiyo evidence. All right. Roman number 5, documented evidence from original documents, externally generated evidence, evidence gathered by the auditor himself. Yes, number 5, you're pointing potea, and it's very, 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 very important. It's very indicated here, 27, 15. Today we are on 15th. Yes, another generalization of audit evidence. All right, this is very, very important. It follows this one, that evidence gathered internally will be considered to be reliable, when the internal control systems used in their preparation are assessed to be strong. Check this. Tumesema that externally generated evidence is more reliable than internal evidence. But again, we are saying we can still rely on this internal evidence if the internal control systems used in their preparation are assessed to be strong. Kwamba kuna very strong internal control systems zinatumika kutengeneza vitabu. So we can always consider those books of accounts as being reliable because they are the end product of a very strong ICS. They are an end product of a very strong internal control The last point. The last point, consistent evidence. Consistent evidence from different sources. Consistent evidence from different sources. Yes, we're saying number 6. Consistent evidence different sources from different sources will be considered to be reliable. Consistent evidence from different sources will be considered to be reliable. Consistent evidence from different sources will be considered to be reliable. Very important, very important. We've mentioned earlier that if the evidence from different sources is consistent, then unless they had colluded, that evidence will be considered to be collusion. Collusion hata watu wanasomaga at a very tender age. Yes. Saa zingine saa ile unakaa kwa your sibling, maybe hata uko high school ama mtu ako college, unakuta mtu ashaambia sibling wao, wewe madhi akipiga mwambie niko huko. Yes, ama akipiga wewe mwambie tuko trip or something. That's collusion. That evidence will be consistent, but again you see it's not reliable. Yes, because it has got the element of collusion, which is an inherent limitation in internal control system. A question.
Point number 5.
Point number 5.
If point number 5 that the evidence that
yes.
is strong as yes, you can rely upon it. How about now point number 3?
Number 3, about external.
Evidence that contradicts the
it does not basically contradict. What you're saying, if you can assess the elements of sufficiency of evidence, that if you went for internally generated evidence and you find that internal control systems are very strong, then you need not go for external. The internally generated evidence will be sufficient. But if you consider ICSs to be weak, this is not enough. Now we progress to Roman number 3, externally generated evidence. Na pia hii iko na limitations. You can imagine you are gathering from, there's some transactions. Have you ever found yourself in a situation where you're not sure how much you owe somebody? Yes, you know you owe them, but I think I took a debt of 7,000. I paid 2,500. I can't recall whether I've made any other payments. Then I'm calling you for you to confirm for me how much you owe, Casey. You can't even trace this. So sometimes externally generated evidence will have issues, and especially if the client does not maintain proper books of accounts. So they have issues. It's only that when you're doing all this, it's just generalization. It's not final, because as a practitioner, you need to observe professional skepticism. You have to observe professional skepticism to avoid any liability from arising. It's a good question. Any other issue? All right, subtopic management. Management stroke financial statement. Financial statement. Assertions. I believe we've already discussed this somewhere. So we'll discuss them very fast. That these are the declarations. These are the declarations made by the management. Declarations made by the management when preparing the financial statements, declarations made by the management when preparing the financial statements. They could be implied. They could be implied or express. Could be implied or express. They are discussed using the acronyms ACCA and cover. ACCA and cover, i.e., you have ACCA and cover. Let's have those assertions. Yes, these points are very similar to matters the auditors consider on reliability of audit evidence. Very important. Yes. mentioned about this assertion sometimes back when we were discussing ISA number 100 on assurance engagements. So accuracy indicates that financial statements are error-free, because error-free means they are accurate. Completeness is about no omission. Nothing has been omitted, no omission. Part of, when we prepare books for the financial statements, actually income statement, how do we label income statement? KCE, income statement for the year. We are recording items for the year. Anything which does not relate to this year is not recorded. That's why you take insurance rest prepaid, because it has been paid, but it's not for this year. It's for next year. You subtract. That's why you add accrued, paid plus accrued, because yes, it has not been paid, but it's for this year. That's observing cutoff assertion, that you want to record items for this year. And it's a very sensitive thing when it comes to auditing. There's some clients who pray hide and seek that in the books of accounts of the year 2022, the January and the February sales of 2023 are recorded in last year to portray as if they made very huge sales. Hiyo kwa jina ya ki-audit tutaita window dressing. Window dressing. Window dressing is a term used to mean misreporting. Misreporting. That's misreporting. Yes. So cutoff, recording items for the year. Paid plus accrued, paid less prepaid. Received add accruing income, received less prepaid income. Since they are not for the year, we only want to record items for the year. So this relates to recording items for the year. Kumaanisha we could be having cut-off error. Kimakosa, una record kitu yenye haifai kwa hizo vitabu. That's a cut-off error. We could also experience cut-off fraud when it's deliberate. It's so deliberate that you omit an expense because it's so major that it's likely to affect the reported profits negatively. You omit it. That's a cut-off fraud. So you could have cut-off error or even cut-off fraud. Let me skip allocation. Classification. Yes, literally putting items where they should be. Like incomes in the incomes, expenses in the expenses. That is in the income statement. Yes. What do we say about classification? Occurrence, that it happened. It happened ni kumaanisha aje? You operated on rental premise. Ni sawa haujalipa rent, but it remains you operated on rental premise. So you record it in the books because it occurred even if you never paid. Umeshtakiwa kwa kesi. You remember ISA 560. ISA 560 is on subsequent events. Tushasoma. Can you give examples of adjusting events? Unaweza kumbuka examples of adjusting events? Examples of adjusting events. Tushasoma. Watu watasema hapana. Mimi nawashuku. Yes.
Yes, of course. Then when they were compiling the financial statement, the court had not yet given the final
verdict. Yes, that's a very good example. Yes, another. Situshaisoma. Mimi naona kama tumesoma. Yes, kama tutakuwa tushaisoma na watu wamesahau itakuwa serious. Yes, the majority. We can tell. Yes, it happens. If not, how sure are you? Oh, you don't have them. All right. When did I teach them? Yes. All right. It's a possibility. It's a possibility that, yeah, it's a possibility that we've not covered. It's the possibility that we've not covered. Eh? Yes. I just mentioned in the middle of something. All right. You see the assertions are here. Do you have a strong feeling that we covered? Anyway, yes, yes. Why am I convinced we discussed? I don't know. So check for me at your free time. Check for me at your free time. Eh? Check for me at your free time whether you have discussed ISA number 560 or IAS 10. It's known as subsequent events. Subsequent. That I've not done a number line like this and told you that anything arising after this date is an off the balance sheet event. I've not done that. Eh? All right. All right. So I'll be discussing it later. So occurrence that it happened even if we didn't pay or we didn't receive that money. Valuation, items have been properly valued, or yes, we can only talk about proper valuation of items. For instance, IAS number 16 is on PPE. It indicates we record assets at cost net of accumulated depreciation. That's valuation for non-current assets. Stock, we have IAS number 2, the rower of cost and net realizable value. Yes, that proper valuation has been done with regard to assets. Existent, it was there. As at the balance sheet date, the assets were there, liabilities were there, capital items were there. That's existence. Ownership or rights and obligations belonged to the client. Because Solomon versus Solomon. Can you remember Solomon versus Solomon? Solomon versus Solomon. Yes. Can you recall Makaura versus Northern Assurance Company? Praise God. Yes. Makaura versus Northern Assurance Company. Those who are taking company law. We have somebody taking company law. Yes. Makaura versus Northern Assurance Company. What happened? Makaura owned was operating a timber business. It's like you're remembering this, eh? What happened in this timber business?
Used timber that was supposed to be, that was not timber. Because so in a separation of being a legal person.
Yes.
So, the court said that
yes, the argument is right. The argument is right. You're just missing something small, but it's about timber. Yes, thanks for trying. Makaura insured timber in his name. Yes, so what happened when he insured timber in his name?
The company should have done insured the timber because the timber belongs to the company.
Company. That was the ruling. What happened to the timber? Fire broke out and those burned. Yes. Yes. Excellent. Thanks for trying. So Makaura versus Northern Assurance Company. Makaura was the owner of the Northern Assurance Company, was in the business of buying and selling timber, insured the timber in his own name. Then the timber was burned down. There was fire, outbreak, natural calamity. Timber was destroyed. Now he is seeking to be compensated indemnity by the insurance company. That never happened because he had no insurable interest in the timber because the timber did not belong to him, belongs to Northern Assurance Company, just like is Solomon versus Solomon. Sawa, nimesema nitumia Makaura ndio sasa ukuwe na more examples because Solomon versus Solomon hiyo tuko nayo already. All right, that it belonged to the company. Assets, capital items, and liabilities belong to the company. Now we have like a subtopic. Still discussing this. I'll explain about the allocation. We talk of Roman number 1, assertions. Assertions relating to account account balances, stroke balance sheet, stroke balance sheet. We use the acronym DAV. This is disclosure. Disclosure is here. Completeness, stroke completeness. Completeness. This is ownership. It's here. Stroke rights and obligations. Rights and obligations. Rights and obligations. Next, we talk of valuation. This is existence. Existence. A, B, C, D. Remember, these are assertions relating to B sheet. So all the balance sheet items, these are the assertions we test. Yes, Solomon v. Solomon, a company is a separate legal entity from its owners. Yes, so you're pointing in here because we want to confirm that these items belonged to the company and not to any other person and not to any other person. So those are the assertions relating to B sheet items, assertions relating to B sheet items. Hii swali nimeiona haraka sana, iko kwa, it was tested November 2015. This is November 2015. Question number 2A. Question number 2A, November 2015. Question number 2A, it was worth 8 marks. It was worth 8 marks, because we only have these 4 assertions. It was asking, explain four relevant, explain 4 assertions relevant to accounts payable at the year end. So what you're supposed to get right is accounts payable is a B sheet item. And these are assertions relating to B sheet. So they're the very same assertions we test with regard to all the assets, including accounts receivable, including cash, including motor vehicle, computers. We test the same with regard to equity capital, with regard to borrowed capital, with regard to long-term liabilities, with regard to current liabilities. These are the assertions we test. So you ask about testing assertions on motor vehicle, disclosure, ownership, valuation, existence remains the assertions to be tested, remains the assertions to be tested. Excellent, excellent. I was just checking whether I could trace another one, whether I could trace another one. All right. Then you have assertions. Then you have assertions relating to account transactions. Assertions relating to account transactions. Assertions. Next item. Assertions relating to account transactions. Assertions relating to account transactions. That's Roman number 2. Assertions relating to account transactions. This is the income statement. Income statement. So they are A, B, C, D, E. A, we talk of accuracy. B, we talk of completeness. C, we talk of cutoff. D, we talk of accuracy, completeness, cutoff, classification. Accuracy, completeness, cutoff, classification, and occurrence. So in the income statement item, sales, purchases, interest on loan, depreciation, commission payable, commission expense, income, discounts allowed and received, we test this. These are the assertions we test with regard to income statement items. Carriage inwards, carriage outwards, salaries, water and electricity, salaries and wages. These are the assertions we test. That they were accurate, but I wanted to add something here, valuation and accuracy. You can discuss valuation and accuracy here. Or in exceptional circumstances, if examiner asks you for 5 assertions relating to account balances, which have never been asked, but it can never be asked, it can always be asked. You talk of dover. Dover is accuracy. Dover accuracy. If they're asking for 4, you can choose to do valuation and accuracy. They relate because when you do proper valuation, it's accurate. That cost minus accumulated position, it's properly valued and it's accurate. So you can choose to get it done or dover or even valuation and accuracy here. But accuracy primarily relates to income statement items, that they are accurate, they are complete, relates to the financial years have been recorded, proper classification, and that it occurred, and that it occurred. And that it occurred. Excellent. Then we have Roman number 3. Where should I rub? I will rub here. The definition. So Roman number 3. Assertions relating to presentation and disclosure. Assertions relating to presentation and disclosure. Hiyo ndio nilikwambia kwamba ni hizi zote sasa. The ACC and cover zote unazidiscuss pamoja, sababu huwa tunasema aje, we are discussing what our records should look like. Yes. So you discuss them together. Of course, allocation is on its own. Allocation. Allocation discusses that assets, liabilities, and capital in B sheet. Then incomes and expenses in the income statement. That's allocation, that we recorded the right items in the right cluster of books. That B sheet captured the 3 components: assets, liabilities, and capital. Income statement captured the incomes and expenses. That's allocation. Then these others remains. So how do you discuss them? You can choose, for instance, to combine several of them. Like this one I've showed you, you can do valuation and accuracy. Valuation and accuracy. See, you can do occurrence and complete occurrence and completeness. Yes, occurrence and completeness. That all that occurred has been recorded. All that occurred has been recorded. You can do like D. Like D, you can do classification and cutoff. Classification and cutoff. Something of that nature. All the assertions, you discuss them there. Presentation and disclosure, you discuss all the assertions. Presentation and disclosure, you discuss all the assertions. I've never seen it being tested, but it's important. You get it right. But it's important You get it right. It's important. You get it right. A question. Oh, assertion. Unfortunately, I've loved the definition, but it's a good question. Let me explain. What it's telling us is, what does it mean when you find the client having recorded in the B sheet? In the B sheet, they have recorded a motor vehicle. There's a motor vehicle in the B sheet worth 1.4 million. What does it mean, unless otherwise? That this B sheet, that this motor vehicle existed as of the balance sheet date. It never existed, then these books of accounts are not accurate. When you find you are an auditor, umetembelea client, umekuta B sheet iko na motor vehicle. There are some questions you will not ask because it's outright that it existed. It's outright that this figure is cost net of accumulated depreciation. See, that's what we do. Yes, that it has been properly valued. Then this vehicle must be belonging to the client. Because what are assets? Assets are items of value belonging to the client. Assets you own them. Liabilities is what you owe to outsiders. Assets belong to the company. So this motor vehicle, if we check the logbook, must be in the name of the company. Otherwise, this is not its rightful place. An asset belongs to the company, belongs to the client. Yes. Again, the client must have recorded all the motor vehicles without omission. That's what I mean by assertions. That's why I call them declarations made by the management when they are preparing the financial statements. They could be implied or express. What do we mean by implied? Implied are ever there unless expressly excluded by the parties concerned. Your definition imetoa kwa Sales of Goods Act. Can you recall the implied what? In Sales of Goods Act, we used to call them implied terms and conditions. In Sales of Goods Act. Kama hukupita law kimungumungu. Yes, you can recall these points. Implied terms and conditions in the Sales of Goods Act. There was things like mercantability. Can you call these mercantability? There was something like yes, seriability. Yes, seriability, mercantability, fit for purpose. Fit for purpose. I last lectured law in 09. So memory natuamba. Na nilikuwa na mwanafunzi alikuwa anauliza swali kwa Kiswahili. He told me he cannot be able to speak English. He writes English but cannot be able to speak English. So law was done in Swahili. Yes, but fit for purpose. Another one that you can call sale by sample. Yes, sale by sample. You see now those ones, thanks for watching. Those ones, unless expressly excluded by the parties in the Sales of Goods Act, they are there. The supply should comply to the sample area given. Should be fit for purpose. You get these, Those are the assertions now with regards to accounting records. Accounting records. I hope that one is a bit clear now. It's a bit clear now. Excellent. We move on now. How do you confirm this? How do you confirm about existence of an item? How do you confirm about existence of an item? Documents. Head count. How can you confirm existence of a motor vehicle? Logbook. Kwa nini naona kama logbook utakuwa na confirm ownership sana? It's true because if you have a logbook with your name, then yes, number plates, yes, license may not say it all because most likely all of us have got driving licenses, yes, but not all of us may be having the motor vehicles. Yes. Observation. Hiyo gari mnasema mko nayo iko wapi? I would like to see it. Iko parking. Where is it? There are things you verify through observation. Books of accounts you verify through inspection. You inspect the books of accounts. You inspect the logbooks. Ownership, that's very correct. Logbook, title deed, yes. Issues of accuracy and valuation, you recalculate. Uhesabu upya. Ukipewa payroll ya kampuni, huwa unaenda una sample a few guys. Unajaribu kuangalia gross pay, you add up the deductions, total deductions, you want to confirm the net pay. You recalculate, you recompute. Stock items, you recalculate. They're saying they have 5 laptops, you can confirm them. They're saying they have 17 tables, you sample a few items to confirm on the accuracy. So about disclosure, have you discussed management representation letter? Yes. Well, we said that if management fails to write a letter, you write it for yourself. Maybe I just mentioned here. Yes. Kwani hakuna kitu tumesoma? Itabidi niulize kitu niko sure tumesoma. At least it balances. Yes. Yes. Really? Munanishangaza. Because we've already done auditor's report. Say yes so that we move forward. Yes. We've done auditor's report. But it's possible. If we've not done a going concern and subsequent events, then management representation letter, we may not have gathered, because it's a way of gathering evidence. Management writes to you. That's under ISA number 580. ISA number 580. ISA 580. Management writes to you, availing some evidence to you. So like disclosure and completeness, management can tell us everything has been recorded through management representation. This should not worry you. This should not worry you. Ownership, tumesema, valuation, existence. Now that's what we want to discuss as a subtopic. And you've already given me the answers. Procedures or methods, subtopic. Procedures or methods of obtaining audit evidence. Procedures or methods of obtaining audit evidence. Yes, hot 10 na kuona ukua kwa nyumba pale unasoma. Yes, maybe you can mute the video. Mute. All right, that's fine. So procedures or methods of obtaining audit evidence, right? And say auditors may use various procedures. Auditors may use various procedures. Auditors may use various procedures in obtaining audit evidence. Auditors may use various procedures in obtaining audit evidence, including auditors may use various procedures in obtaining audit evidence, including obtaining audit evidence, including number 1, inspection. Number 1, inspection. Number 1, inspection. Number 2, observation. Number 2, observation. Number 3, inquiry. 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 Number 3. Number next, confirmation. 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 Number next, computation and recomputation. Computation and recomputation. Computation and recomputations. Computation and recomputations. Next, reviewing reconciliations. Reviewing reconciliations. Reviewing reconciliations. Reviewing reconciliations. Next, analytical procedures. Analytical procedures. Analytical procedures. Ako ni topic muhimu sana tutakasoma kanaga maneno mingi with 4 subtopics. Analytical procedures. Analytical procedures. Maybe you can do a line in each. Just a small, a brief explanation. Starting with the inspection. Inspection nimekueleza ni vitabu za accounting unapitia. Inspection, right? This is the process of physically. This is the process of physically reviewing. This is the process of physically reviewing the accounting records. Physically reviewing the accounting records and tangible assets. Reviewing the accounting records and tangible assets. Tangible assets. So tangible assets can be inspected. Inspect them. Number 2, observation. Observation say refers to the procedure. Hii ni direct Kikuyu translation. Hii ni Kikuyu tunaandika. Refers to the procedure of looking at a process. Yes. Refers to the procedure of looking at a process. Hiyo ni Kikuyu hiyo sasa. Kuangalia. I wish I can pronounce it in Kikuyu. Inatoka hivyo tu. Yes. Corona. Yes. Looking at a process as it is being performed. As it is being performed by the client staff. Looking at a process as it is being performed by the client staff. As it is being performed by the client's staff, e.g. bookkeeping procedures, e.g. bookkeeping procedures, e.g. bookkeeping procedures. Unawaangalia vile wanafanya. How do they do it? Yes, unawaangalia. Kuna majamaa wanasimamanga pale kwa super pale nyuma, hawana uniform ya super, wanaangalia how the customer service, how is it being done? Which areas needs to be improved and so on. So just observing how things are happening. Next, inquiries, let me say, this refers to seeking of information. This refers to seeking of information, by asking queries. This refers to seeking of information by asking queries. This refers to seeking of information by asking queries and obtaining answers. Either orally or through reprise. Or through replies of questionnaires. Replies of questionnaires. Through replies of questionnaires. Through replies of questionnaires. Excellent. That's about inquiring. Number 4, confirmation. Confirmation ama ungeandika stroke. Si stroke, hapo mbele andika. Yes, put it in brackets. Third party confirmation. Acha ikuwe third party confirmation. Ni ile tulisema you can call the data to confirm. Hata tutaite jina ingine mzuri. Circularization. You circularize. Kwa inaitwa circularization. Yes. So that's what we call third party confirmation. You know, you even write to banks. You write a bank standard letter. Tunataka bank standard letter. You are writing to the bank to confirm about the bank balances. Uko na bank statement, but still you want a reply from the bank direct to you as an auditor. Professional skepticism at its highest. Yes, that huwezi amini na your bank statement. All right, that's what we are referring to. They say this refers to seeking of evidence. This refers to seeking of evidence. This refers to seeking of evidence from external parties. Seeking of evidence from external parties. Seeking of evidence from external parties to the entity. External parties to the entity. External parties to the entity, e.g. customers, comma, bankers, creditors, etc, etc. Tunakuachia ni wewe kuweza kudetermine hizo procedures, which assertions can they confirm. Kama hiyo third party confirmation, it can confirm existence, kwamba huyo data ako juu. Kuna mtu anaweza wakapigia hata hajui KCE na ameandikwa kama data. Unajua KCE at KCE what? Baka anakwambia tu long number. So unajua huyu data hayuko huyu. So third party confirmation can confirm existence and valuation. Utamuuliza how much do you owe the school? Kwambia 0 na wewe unamuuliza this balance kwa nini kulienda aje. So you need to get right what those procedures are likely to be confirming. Number 5, computation stroke recomputation, right, and say this is the process of checking arithmetical accuracy. This is the process of checking arithmetical accuracy of records. This is the process of checking arithmetical accuracy of records. E.g. in form of calculations, or casting and cross-casting. Casting and cross-casting. Casting and cross-casting of schedules. Casting and cross-casting of schedules. Casting and cross-casting of schedules to be able to determine any errors. Casting and cross-casting of schedules. Casting ni hivi, kuunganisha lowwise. Mi wanaziita Roman Catholic. Ndio nijue low columns. Yes, low columns. So this is casting, downwards is cross-casting. Kama kuna kitu inaweza kushika vibaya ni payroll. Watu wanafanyaga ukora sana. Unakuta ashaweka basic pay 20,000. Yes, 20,000. Allowance 11,000. Toto hapa hakubali Excel ifanye hiyo computation. Anaweka figure yake 47,000. So unaangalia na records unakuta ziko sawa. Forgetting kwamba hii addition inaweza kuwa wrong. So that's why we are saying cast and cross-cast the schedules to test the accuracy. All right. Number 6, reviewing reconciliations. Hiyo reconciliations tunakuwa na 3. We have 3 types of reconciliations. Tuko na bank reconciliation statement, tuko na debtors and creditors control accounts, na tuko na cash flow. These are the 3 major reconciliation statements. So unazifanya kuangalia kama mambo yanaendanisha sawa sawa, right? Say this is the process of checking. The accuracy. This is the process of checking the accuracy and completeness. This is the process of checking the accuracy and completeness of various reconciliations. Process of checking the accuracy and correctness of various reconciliations prepared internally by the management. Prepared internally by the management. E.g. control account reconciliations. control accounts reconciliations, comma, bank reconciliations, bank reconciliations, bank reconciliations, comma, cash flow statements, etc., etc., cash flow statements, etc., etc. Excellent. We can look at number 7, analytical procedures. Analytical procedures. Ako ni ka topic tutakasoma. Ainaga maneno mingi. We already discussed what they are. We discussed 6 types of analytical procedures. We discussed uses of analytical procedures, advantages, disadvantages, and we are done. But it's a very interesting area. So say, these are the procedures where auditors. These are procedures where auditors try to reason out, checking the consistency. Auditors try to reason out in checking the consistency of information, reason out in checking the consistency of information from different sources. Consistency of information from different sources and confirming the reasonableness and confirming the reasonableness and confirming the reasonableness, of transactions and balances, of transactions and balances, of transactions and balances, of transactions and kumbuka ile swali tulifanya ya forensic ile nilikutumia ilisema ati kulifutwa 25% na tukaona payroll ilipungua na 3%. This is analytical review procedures. It's able to tell you there is no consistency. There is trouble. Something needs to be explained. Something needs to be explained. So that's how analytical review procedures will enable you to gather evidence, will enable you to gather evidence. Kuna ingine point nimekumbuka, hatuko tumeiweka. Number 8, reperformance. Hiyo sikuwa nimeiweka, so unaweza iongezea hata kwa zile points zako. I don't have it in the notes, but it's a very important procedure. Reperformance ni ile hata nime-explain hapa. Atualisha hesabu stock, unachagua a few items of stock, unaliperform with matters of confirming the existence and their valuation, for instance. So the performance, how do we even explain? I don't have it here. So the performance. This is where an auditor, this is where the auditor may sample a few items. Auditor may sample a few items. Auditor may sample a few items. Auditor may sample a few items, e.g. stock items, e.g. stock items, e.g. stock items. To confirm their existence and valuation. To confirm their existence and valuation. Confirm their existence and valuation. Auditor ni hivyo huwa anafanya. Akisample a few items akute ziko na makosa, anakwambia now the books of accounts are materially misstated, because if I've sampled just a few items and their issues, what about the entire population? Could be having lots of misstatements. So those are the main audit procedure gathering, evidence gathering procedures. Evidence gathering procedures. How do we wind up? Limitations of gathering evidence. Limitations of gathering evidence. Limitations of gathering evidence. Limitations of gathering evidence. tulikuwa tushataja zingine ati kwamba hata unaweza enda external na bado usipate evidence sawa sawa. So number 1, the process of gathering evidence, the process of gathering evidence, the process of gathering evidence may be considered. The process of gathering evidence may be considered to be expensive. May be considered to be expensive in terms of resources. May be considered to be expensive in terms of resources. To be expensive in terms of resources. Number 2, there may be lack of cooperation. There may be lack of cooperation. There may be lack of cooperation from the client's staff. Lack of cooperation from the client's staff. Lack of cooperation from the client's staff, which may also frustrate. Which may also frustrate. Which may also frustrate the process of gathering evidence, which may also frustrate the process of gathering evidence, which may also frustrate the process of gathering evidence. It's very true. They prove to be hostile. They like to avail informations. Number next. There is also the possibility, there is also the possibility of the client's staff. There is also the possibility of the client's staff. There is also the possibility of the client's staff colluding to give misleading information. Colluding to give misleading information. Colluding to give misleading. Yes, they can collude within themselves. They can collude with outsiders. Yes, to give misleading information. Next, number 4. The auditors may also be dealing. Auditors may also be dealing with weak ICS. Auditors may also be dealing with weak ICS. Auditors may also be dealing with weak internal control system, weak internal control system, or situations of lack of appropriate records, or situations of lack of appropriate records, or situations of lack of appropriate records, leading to insufficient evidence. Leading to insufficient evidence. Leading to insufficient evidence. Leading to insufficient evidence. And the last point say, evidence, especially from external third parties. Evidence, especially from external third parties. Evidence, especially from external third parties, may be delayed. Evidence, especially from external third parties, may be delayed or may never be received by auditors. May be delayed or may never be received by auditors. May be delayed or may never be received by auditors, causing inconveniences. Causing inconveniences. Causing inconveniences. Causing inconveniences. I've remembered number 6. We can also put it down. Number 6. Third parties may fail to maintain reliable accounting records. Third parties may fail to maintain reliable accounting records, may fail to maintain reliable accounting records, may fail to maintain reliable accounting records, i.e. single entry accounting. Single entry accounting or incomplete records. Single entry accounting or incomplete records. Or incomplete records. That's it on audit evidence. Lakini ndani ya hiyo kunakuwa na topics twingine tutaangalia, because we are supposed to discuss ISA 530 on audit sampling. You're supposed to discuss ISA 520 on analytical review procedures. ISA 620 on expert evidence. So those are subtopics on their own. Those are subtopics on their own. Any question, any suggestion?